Hello everyone, and welcome back to Buffett Investment Legend. In today's video, we're diving into one of the most powerful investing lessons ever shared by Warren Buffett. Never lose money. It sounds simple, but most investors completely misunderstand what Buffett really meant. And that misunderstanding? It's exactly why so many people fail in the market. So in this video, we'll break down Buffett's #1 rule, how he used it to build his empire, and why this one mindset could completely change the way you invest forever. Let's get started. Most people hear Warren Buffett say, "Never lose money," and assume it means you should never see your investments go down. But that's not what he meant. Because if that were true, no one would ever invest. Markets go up and down all the time. Even the best companies in the world can drop 20%, 30%, sometimes even 50%. So clearly, that's not the point. What Buffett was really talking about is something much deeper. Something most investors completely ignore. He wasn't talking about temporary losses. He was warning you about something far more dangerous. Permanent loss of capital. This is the kind of loss you don't recover from. The kind where your money isn't just down, it's gone. And this distinction changes everything. Because in investing, not all losses are equal. If a strong company drops in price, but the business is still growing, still profitable, you haven't truly lost money yet. The price may fall, but the value is still there. But when you invest in something you don't understand, a weak business, a broken model, or pure hype, and that investment fails, that loss is permanent. And that's exactly what Buffett has spent his entire life avoiding. This is the difference most investors miss. Volatility is normal. Permanent loss is fatal. The market will always move. Prices will always fluctuate. But your job as an investor is not to avoid every drop. Your job is to avoid the decisions that can wipe you out completely. Because once your capital is gone, you don't get to play the game anymore. Now here's why this rule matters more than anything else. Because losing money doesn't just hurt. It puts you at a mathematical disadvantage. If you lose 50% of your money, you don't need 50% to recover. You need 100%. And that's where most people underestimate the damage. A single big loss can set you back years. 2 or 3 big losses, and you may never fully recover. This is why avoiding loss is more powerful than chasing gains. Because losses compound against you, while gains compound for you. Let's make this simple. Imagine 2 investors. The first earns a steady 10% every year. The second earns 30% one year, but loses 50% the next. At first glance, the second investor looks smarter, more aggressive, more exciting. But over time, the first investor wins by a wide margin. Why? Because consistency beats volatility. And more importantly, survival beats everything. This is how Warren Buffett thinks. He's not trying to be the smartest person in the room. He's trying to avoid being the one who makes the biggest mistake. Because in investing, you don't need to be brilliant to win. You just need to avoid the mistakes that take you out of the game. And that's why this rule, never lose money, isn't just advice. It's the foundation of long-term wealth. So how does Buffett actually apply this rule? It's not about avoiding risk completely. It's about controlling it. First, he stays within his circle of competence. He only invests in businesses he understands. If something is too complex, too uncertain, or outside his knowledge, he simply passes, no matter how popular it is. Because what you don't understand is where you're most likely to lose money. Second, he uses a margin of safety. He doesn't buy assets at their full value. He buys them at a discount. So even if his assumptions are slightly wrong, he still has protection. This reduces the chance of permanent loss. Third, he focuses on high-quality businesses. Companies with strong fundamentals, predictable earnings, and durable competitive advantages. Because great businesses survive downturns. Weak businesses don't. And finally, he thinks long-term. He doesn't trade based on emotions. He doesn't chase trends. He gives his investments time to grow. Because time, when combined with quality, reduces risk But impatience increases it. This is how he avoids permanent loss. Not by predicting the future, but by making fewer, better decisions and giving them time to work. Now here's the problem. Most investors do the exact opposite. They chase what's hot. They see a stock going up fast, and they jump in, afraid of missing out. But by the time they enter, the risk is already high. They follow noise, news headlines, social media, opinions, instead of focusing on real value. And this leads to emotional decisions. They panic when prices drop. They get greedy when prices rise, buying high and selling low. They trade too often, thinking more action equals more profit. But in reality, it just increases mistakes. They ignore risk. They focus on how much they can gain, but never ask how much they can lose. And some even use leverage, magnifying both gains and losses. This is how most people lose money. Not because they're unlucky, but because they break simple rules. They try to win big, instead of trying not to lose. And that's the difference. Because in investing, avoiding mistakes matters more than chasing opportunities. So how can you apply this rule? Start with one simple question. What could make me lose money here? Before every decision. Not how much you can gain, but how much you can lose. This shift in thinking is what separates amateurs from professionals. Next, avoid big mistakes. You don't need to be right all the time. You just need to avoid being wrong in a big way. Because one big loss can erase years of progress. Think in probabilities. There are no guarantees in investing, only outcomes with different levels of risk. So focus on making decisions that have favorable odds. Play defense first. Protect your capital before you try to grow it. Because if you don't lose, you're already ahead of most people. And finally, be patient. Wealth is built over time, not through quick wins, but through consistency. This is how Warren Buffett thinks. Not about getting rich fast, but about staying in the game long enough to win. Let's make this real. Imagine two investors. The first chases hype. He buys what's trending, what everyone is talking about. At first, it works. He makes quick gains. He feels confident. Then the market turns. The company wasn't as strong as it seemed. The price drops hard. He panics. He sells. And that loss becomes permanent. Now the second investor. He moves slower. He studies the business. He understands what he owns. He buys strong companies, even if they're not exciting. Sometimes, prices drop, but the business remains strong. So he holds. Over time, the company grows. The price recovers and keeps rising. No hype. No panic. Just discipline. And in the long run, that difference changes everything. Because success in investing isn't about catching every opportunity. It's about surviving every mistake. At the end of the day, investing isn't about getting rich quickly. It's about staying in the game long enough to become rich. And that's the real meaning behind this rule. Never lose money. Not because losses never happen, but because avoiding big, permanent losses is what allows wealth to grow. You don't need to predict the market. You don't need to chase every opportunity. You just need to protect your capital and make smart decisions consistently. Because in this game, the winners aren't the ones who take the biggest risks. They're the ones who survive the longest. So if you remember just one thing from this video, make it this. Rule number 1, never lose money. Rule number 2, never forget rule number 1. So the next time you think about investing, don't ask, how much can I make? Ask a better question. How much could I lose? And can I survive it? Because that one question is what separates amateurs from long-term winners. That's how Warren Buffett built his empire. Not by chasing every opportunity, but by avoiding the ones that could destroy him. And if you follow the same principle, you don't need to be perfect. You just need to stay in the game If this video gave you a new perspective, hit subscribe. Because on this channel, we focus on what actually builds wealth long term. No hype. No shortcuts. Just principles that work. And if you're serious about investing, in the next video, we will continue analyzing Warren Buffett's rule number 2, why you should never invest in what you don't understand. Stay tuned. Because one rule protects your money, but the next one shows you how to grow it.